Welcome to the Motley Fool Investing video. My name is David Crow and my guest today is Jerome Booth from Ashmore Investment Management. Welcome, Jerome.
Hello.
Right. What are the three top things that you think investors should be aware of today, particularly UK investors?
I think they should be aware of macroeconomic imbalances in the global economy and the risks that go with that. And that means understanding history, actually. We have a tendency to look at just the very short term. I think they need to understand the opportunities in emerging markets across different asset classes, and not just to increase return, but to reduce risk as well. And they also need to, I think, appreciate that their liabilities may not be just in nominal terms if we have a period of inflation in the UK and Europe and the US in the next couple of decades. So they need to, I think, re-examine who's going to be producing the goods in the future, and which companies and countries are going to be pricing global goods markets, and that's emerging markets again. So actually, to meet one's liabilities, one actually probably needs to have much more in emerging markets.
So are you saying that investors should try and switch their mindset to try and start looking for companies that are based in emerging markets rather than companies that are based in the UK?
I think they can do a bit of both, but I think it's very important to understand that just going for companies with revenues from the emerging markets may address the issue of the upside, but not the risk. When Lehman collapsed, there were articles about Lehman's in the UK having 6 billion in cash, and then there was a 6 billion transfer. If a company in the UK, has enough liabilities to get into serious difficulty, then the fact that their upside is from emerging markets is irrelevant. So you're not really getting the real thing by just investing in UK domiciled companies. It's better to take the plunge. There's a psychological resistance to that, I understand that, but that's actually the correct, I think, rational response.
Some people think that just simply investing in the FTSE 100 index tracker will give you enough international exposure. Are you poo-pooing that idea now?
I'm saying you need to do better than that. I'm saying, the UK equity market is one domestic equity market.
Okay.
It's not the whole world.
Yeah. So which are the companies that you think? I presume you're going to be talking about Ashmore Group, your own company, which is listed on the stock market.
Well, it does have the advantage of almost 100% income from emerging markets. Not, it doesn't really have much income from the developed world. So it does get around some of that problems. And yes, I would say this.
Yeah.
It is a fantastic company, in my humble opinion.
Being the second biggest shareholder in the company also.
Oh, couldn't possibly say.
Okay. And what is the ticker for Ashmore Group?
It's ASHM.
And it used to be in the FTSE 100
until September. Yeah, it got in and it's out, but we'll see what happens.
Okay,
it's on the verge.
Can we take it that Ashmore Group might be back in the FTSE 100 sometime?
I couldn't.
Who's to say?
Who's to say?
Okay.
Don't know.
Thank you so much for joining me today. This was Jerome Booth from Ashmore Investment Management. Thank you for watching.
Thank you.